How UPI will rule the world of payments, why this payment method is taking over.
The world of payments has traditionally been dominated by cash, credit cards, and checks, all of which are not only slow but expensive as well.
However, one payment method is already overtaking these payment methods once and for all, and it's called UPI, Unified Payments Interface. Let's take a closer look at what makes this method so great and why it will rule the world of payments. What is UPI? Unified Payments Interface is an instant real-time payment system developed by National Payments Corporation of India, NPCI. The interface facilitates interbank peer-to-peer, P2P, and person-to-merchant, P2M, transactions. It is used on mobile devices to instantly transfer funds between two bank accounts. The mobile number on the device is required to be registered with the bank. The UPI ID of the recipient can be used to transfer money. It runs as an open-source application programming interface, API, on top of Immediate Payment Service, IMPS, and is regulated by the Reserve Bank of India, RBI. As of September 2022, there were 358 banks available on the platform with a monthly volume of 6.7 billion transactions amounting to 11.16 Indian rupees lakh crore. How does UPI work? UPI payment is the advanced version of the old-school payment methods of IMPS and NEFT. Through UPI payment, the account holders can transfer a certain amount from one bank account to another without additional charges. To process a UPI transaction, the following participants are involved. 1. Payer App/PSP. PSP stands for a payment service provider. Payer PSPs are apps that allow customers to initiate/complete transactions. For example, Pay, Phonepe, Beam, Paytm, etc. These apps have replaced the traditional bank apps and allow users to create UPI handles to make or accept a transaction. Any customer can install these apps and can create their UPI handle. NPCI takes care of the app certification, and as of now, there are 20+ third-party apps certified by NPCI for issuing UPI handles. However, all these UPI apps need a sponsor bank to start onboarding users. 2. National Payments Corporation of India, NPCI. NPCI is a non-profit org set up by RBI and funded by different major banks. It acts as a trusted switch to connect banks and payment service providers, PSPs. Similar to the role played by Visa in the case of card payments, NPCI makes sure that data flow between banks and payment apps are routed to the correct and verified destinations. NPCI, in the case of UPI payments, has made the banking services interoperable. Users can use any UPI app to link any of their bank accounts and can transfer or accept payments. NPCI also exposes a bunch of non-financial interoperable APIs for everyone in the ecosystem. For example, validate VPA/UPI ID, bank list, etc. 3. Issuing bank, sender's bank. In the case of UPI payment, the money is transferred from the issuing/sender's bank account to the acquiring, merchant/receiver's, bank account. The issuing bank has to debit money on NPCI's request and send a debit response to NPCI once the debit is successfully done. For acquiring bank, receiver's bank. The acquiring, receiver, bank's job is to credit money on NPCI's request and send a credit response to NPCI once the credit is successfully done. 5. Payee PSP. This is the acquirer or payment gateway used by the merchant in the case of P2M, person-to-merchant, transactions. The advantages of using UPI. UPI is a cheap, secure, reliable, mobile-first, interoperable, open-source, instantaneous settlement in both pull and push platform. UPI payments are very fast and typically payment can be completed within seconds. Almost every bank allows UPI transactions through mobile applications. payments are completely safe. To complete a payment, the user needs to have the SIM card of his mobile number present in his phone and also needs to enter the secret MPIN each time. UPI payment facility allows individuals to request money from some other individual, which is not an option with other payment methods like IMPS and EFT. Payments can be made 24/7. It's completely free. Why UPI is taking over the world of payments? Simplicity, a centralized facility that does not depend on a single bank, and a robust infrastructure built on the back of a secure and proven IMPS system make UPI a roaring success among digital payment gateways. The Indian real-time payments market is well developed when directly compared with other markets like the US, the UK, Canada, and Australia. India accounted for the largest number of real-time transactions in 2021, 48.6 billion. This figure was almost threefold that of the closest challenger, China, 18 billion transactions in 2021, and almost 7 times greater than the combined real-time payments volume of the world's leading economies, the US, Canada, the UK, France and Germany, 7.5 billion. Share of instant payments. Real-time payments like UPI and IMPS formed 31.3% of the total payments in India for 2021. India is the poster child for real-time payments and a shining example of how a coordinated, collective, nationwide effort can unlock huge economic and social potential. The NPCI has clear selling points to convince other governments of UPI's economic benefits. If India plays its cards right, it has the necessary ingredients to help co-create payment systems with participating nations.